Good evening, everybody. Sorry for the delay. Obviously, my computer just likes to act up just as we're getting ready to go. We're going to do a brief rehab or a redo of the left-right combo. We usually don't do something this quick after we've done it recently, but we were getting a lot of questions or a lot more people saying they wanted a lot more clarification. So I'm going to run through this real quick. Then we're going to do something that I'm sure that most investment teachers don't do, and that's what to do when a trade doesn't work. So we're going to work on that tonight, and that's the reason for that is because of the nature of the market right now. We're getting a lot of trades that aren't confirming because the market itself just doesn't have any great energy going one direction or another. So if you've got questions as we go through the left-right combo again, feel free to ask. And we're going to do the left-right combo and the best friend, and then we'll go to live charts to kind of clarify more which one. So basically, when we're setting up our scans, we're trying to find or identify the strongest signals and patterns. And then the reason for setting up the scans is we don't want to be analyzing or trying to find the best trades most of the night. What we want to do is find the good trades fast so that we have more time to be analyzing which one of those good trades are the best trades. So the first one we're going to look at, these are what I consider the 12 strong signals, and I'll let you all go through them later, but these all have significant results. And the reason we're kind of concentrating on the top two, the left-right combo, is because they have high probability expected results. So this kind of puts us into a mode of where we don't have to be out there scrounging around all night trying to find the best trade setups. If we know that the results of a left-right combo and a best friend signal are extremely powerful, then we want to find them real quick. So the way you do that is you set up your scans. Now, we're going to be concentrating pretty soon on doing some training on how to set up your scans for Thinkorswim, since a vast majority of the people that are in the chat room and in our membership use Thinkorswim. And so you can use this to find the best trades, or you can narrow it down by saying, all right, which ones were the strongest of the trades? So in this case, if we said we're looking for a left-right combo with our criteria, and it was up more than 4% on the day, which ones were those? So we can look at them real quick. Say, all right, looks like a J-hook pattern on this one. There was our kind of left-right combo here telling us we were in an uptrend. So the scanning techniques that you can use on Thinkorswim provide both long and short results. So the result of a left-right combo is very simple. Anytime you see a doji involved with a multi-day or multi-time frame signal, that doji is usually going to add a lot more relevance or a lot more power to a reversal. In this case, if you see a doji followed by a bullish engulfing signal, not on here, but especially if you're near the oversold area, but you don't even need to be into the oversold area. A left-right combo tells you there's a dramatic change of investor sentiment. And the confirmation is not required. If you see a left-right combo in the oversold area, if you were short, you closed your short position on this day. If you're thinking of going long, I'd still wait for positive trading the next day, or if I happen to be watching this trade, I might put on a half a position just so I'm getting ready for the next move. A left-right combo. Now here is the relevant result. Indecisive, 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 left-right combo, boom, that starts you. You're just going to find that once you start identifying this signal, that the results are extremely, extremely high probability that that the results are going to occur with a much greater degree of probability, not only a greater degree of probability, but a greater degree of strength in that next price move. If you happen to see it here, obviously you're not in the oversold area, but if you can see pull back, pull back, pull back, left-right combo, right smack dab on the T-line, that tells you if you were getting a little bit nervous about staying long, this was good confirmation that you want to stay long. They were doing a left-right combo right there on the T-line. Or a left-right combo that's going to tell you that your next pattern breakout is in progress. So what do we got going on here? Here's our bobble. And then when you see a left-right combo, if it opens positive the next day, what this should be doing when you realize that the left-right combo has that strong probability that it's going to perform in the expected manner, that instead of sitting here saying, oh, it's gapped up, I don't know whether I want to be chasing it, as a candlestick investor, you've got much more confidence now to say, oops, it's doing what I expect it to, let's get in as fast as possible. So instead of hesitating, because I have a lot of people say, shoot, I don't know what happened, I saw this working and I finally bought it up here, when buying it right here would have kept you from having to be concerned that you may have gotten in at the wrong time. So anytime I can do a scan and find the signal very quickly, then I can put it on my watch list and say, all right, let's see what this is setting up. There's my classic fry pan bottom, J-hook pattern setup, and what kind of makes it more compelling that it's a J-hook pattern setup, because it's moves sideways, moves sideways, moves sideways, and then a left-right combo. I'm ready to buy immediately on positive trading. I'm looking for that signal at relevant points, such as the T-line. A left-right combo is a doji day, an indecisive trading day, followed by a bullish engulfing signal. That's as simple an explanation as I can give you. Remember, anytime you see a doji involved in a multi-time frame signal or pattern, it's going to be acting with much more credibility or compelling results. All right, we'll bring those up when we go to live charts. So if I see this pattern setting up, and we're right here at the breakout level, it's indecisive, and then I see a left-right combo at the breakout, what can I expect? Wave 1, wave 2, wave 3, the same magnitude as wave 1, our J-hook pattern. Left-right combo in the oversold area. Tells me if they start trading positive, I can be buying. If they start trading positive and I didn't see it on this day and saw it on this day, see if I can get rid of, no, tax not. Saw it on that it closed up here after a left-right combo, I'm buying on this day. Trudy, it applies to all time frames. I always want to give the definition of a candlestick signal, which is the accumulative knowledge of everybody buying and selling during a specific time frame. Now, the gapping may be a little bit less prevalent on an intraday chart, but so there's going to be some signals and patterns that you're not going to see, especially with gaps in it, if you're watching a chart that continually trades. So for example, Forex that doesn't close, you're not going to see gaps as often, or if ever. So we're looking at daily charts here, or kind of the analysis of what's happening on obviously a daily basis for the swing trader. But if you're a day trader or trade intraday, the signals work just as well. And we'll show some of that as we get to the live charts. So the left-right combo works both on a bullish situation or a bearish situation. Once again, the more relevancy we can put into a signal, such as we can see there was a downtrend, and every time it came up to the top here, it did a sell signal. That left-right combo is more relevant because it tells you exactly where they've decided to sell again. No, a doji just needs to be an indecisive looking day, which could be your spinning top. Again, the perfect doji is where it opens and closes right at the same level, but 95% of the time, you're going to see doji days where there's a little bit of a body. All right, so again, anytime we can put in our scans and find the best trades, then we have a lot faster analysis of if this is a left-right combo, Morningstar signal, what can I be expecting? By a J-hook type pattern in the next price move. Now, it's showing a left-right combo here. I'd be a little bit more suspicious here because you're probably not in the oversold area, whereas I'd be more apt to be watching down here. Oops, okay, I guess we got a power pack. Oh, it's stuck in here. All right, so we're going to have that package up where you can find the signals and patterns a lot quicker. And so this is what you want to be looking for. I don't know whether that's a package. Found is cutting in and out. Trudy, you might have to go up to that little red X up in the top right and click on it. Oh, okay. Those are the signals and patterns for Thinkorswim. All right. Thank you, Becky. So you've got a bunch of them. Uh-oh. So these are the ones that we're looking for. And for example, the top one is your best friend. Anytime I see a doji followed by a gap up, it's either going to be confirming Prav, same scenario. Go up to that top right circle on your screen, click on it, and then come right back in. You might get a better reception. So the best friend signal, either on the bullish side or look at our bearish left-right combo, gap down. This is why if I'm in a long position and look at the other aspects of when it's time to think about taking profits, look how far away you've moved from the T-line. This is just a very simple analysis to say if you're in an uptrend, overbought condition, and you start moving too far away from the T-line and you see a sell signal, take off at least half the position, if not the full position. Because where do you think it's going to come back to? You know it's probably going to come back to the T-line. Okay, CB. All right. Your bearish best friend starting to nudge up here at the 200, gap down through the T-line. You're in a downtrend. Starts back up. Where do you think your next likely target is? Probably back up to the 50. But what's the one thing that we always kind of tell about a trend? You buy on a buy signal, you sell on a sell signal. So if you're heading back up to an expected target, then all of a sudden you see a strong sell signal like a bearish left-right combo, what's that tell you about your uptrend? It's over. Close it back out and go on to something else. Or think about going short. So this is why we want to always know what the nature of our signals are. Doji in the overbought area that just touched the 200. If it opens lower, what's our simple doji rule? The price is usually going to move in the direction of how it opens after a doji. If I was long in the overbought area and start seeing dojis up, moving a little bit away from the T-line, I've got a safety stop on. We'll kind of look at where we want to put safety stops. Left-right combo, right smack dab on a logical resistance level. And which way was this trend going prior to this? You can see the overall trend is heading down. The 50 seems to be a relevant resistance level. So look what we had when we got here. This is why I like to explain the logic that goes into the candlestick analysis. You're in the overbought area. What do the Japanese race traders say about exuberance? Where do most people buy? They usually buy at the top. They gap up in the overbought area and then close back down here doing a shooting star. That in itself was telling us it's time to take profits. It stays right here on the 50 and then does a bearish left-right combo and closes below the T-line. What's that telling you about this resistance level? It's still telling us we're in a downtrend. Is the left-right one of the strongest signals? Yes. That's why we're looking at it, Bob. It was number 2 in the list. And again, those rankings are not necessarily that one is dramatically stronger than the other. It's just that if you're trying to find a list of which signals and patterns are the strongest, we've already kind of quantified them for you. Can this be effective on a 5, 15, 30? Yes, on any time frame. So I used to trade the E-minis on a 1-minute, 3-minute, 10-minute chart combination. Right now I trade futures, but a little bit slower. I use the 10-minute chart as my bellwether chart, seeing what the overall trend is. And then to enter, I flip down to my 5-minute chart, and if it's also looking good, I flip right down to the 1-minute chart. Say, is this a good time to be getting in that would confirm my 5-minute, which would also be confirming my 10-minute. So if you always go back to the definition that the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame, you'll see that they work just as well on the 1-minute chart as they do on the monthly chart. Indecision, shooting star, doji. Where was the final nail in the coffin of this uptrend? And you saw that bearish left-right combo. What was this telling us? This was a while back. Where was our best friend signal? There was a doji harami gap up off the 50 through the T line, and stochastics coming back up. When were we buying? Right there on the next day. What type of pattern do you think we were looking for? Wave 1, wave 2, wave 3 of a J-hook pattern. And we'll get to spinning again because we're going to use that as an illustration of when not to get into a trade. Same scenario here. What was our target? The 50. Didn't quite get there, but then we had a bearish left-right combo. What did that tell us about our uptrend? It's probably over, that if you were long, you closed out the position. CB, there is no dumb questions in here. But is the left-right combo a pattern? It's a signal. I'd call it a signal. A pattern is something that you can see developing with multiple time frames. So it doesn't matter what you want to call it, whether you want to call it a pattern or a signal. Visually, you can see instantly what was happening, a doji bearish engulfing signal. There's your bearish engulfing signal. There's your bearish best friend. What did that tell you about the trend for Roku? It was heading down. When did you cover it? When you saw a buy signal and a close back below the T line. Yep, there's that power pack again. All right, so your best friend, here's that list again. Here's all the ones that have very high probability results when you identify them. So I put the best friend signal as number 1. But if I'm looking at best friend and left-right combos, they're both strong. Series of dojis, strong. Kicker signal, bullish flutter kicker, they're all strong. So what you're adding to your analysis when you see these strong reversal signals is where are they occurring? Are they bouncing up off a moving average? Are they well in the oversold area away from the T line? You're looking for a reversal signal and then being able to visually add other indicators to it to enhance the probability that the reversal has occurred. Yes, Brad, that's true. So the other benefit of knowing what these signals look like is it allows you to have exact timing for your entry. So if you're looking at the description of a best friend signal, prices are usually in a downtrend. Prices are usually in the oversold area, stochastics below 20. And again, I use slow stochastics of 1233. Then you see a doji or a spinning top forming. Now, if you see a doji or a spinning top in the oversold area, remember what a doji or spinning top illustrates. Indecision between the bulls and the bears. That's your first visual clue that there might be a change of investor sentiment. For your best friend signal, the next day it gaps up and usually above any of the previous day's trading of that doji, or the previous day's doji. So I'm looking for this in the oversold area, followed by a gap up. So if I'm scanning on my toss scans, now I put that in my watch list to see what it's, what other pieces of evidence we can see that would make this relevant. And it doesn't matter whether you're doing on stocks, bonds, indexes, ETFs, currency. Remember, candlestick analysis is merely measuring what's going on in investor sentiment in a trading entity. It doesn't matter whether you're trading tulip bulbs. We're all analyzing all markets. So remember what the Japanese rice traders developed these signals and patterns, or recognize these signals and patterns from. Rice, the most basic of all commodities in the world, the most boringest trading commodity of all the world. And they didn't become wealthy trading rice. They became legendarily wealthy. So this is the one aspect that kept drawing me back to, I looked at every trading method you could think of back in my younger days. And when the internet started, you got solicited every single day of the best new secrets in investing. The only problem with candlesticks was there wasn't any new secrets in it. It was old as the hills, and it was on one premise or one indicator that has been consistent for hundreds of years, and that's human nature. Should we still buy on a left-right combo or best friend signals, even if the stochastics are overbought? Depends on whether you're coming out of a pattern. You can see this little left-right combo up here. What'd that tell us? It told us the T-line was acting as support, even though we weren't in the oversold area. What can we anticipate? That we might be in a J-hook, another move to the upside. Now, this is actually the 10-minute chart. So it opened positive and started trading positive. Where was the first place to start taking profits? There's our bearish harami. It opens lower the next 10-minute session. Where do you think it was moving back to? Down here. When was it time to start buying back? Over here. Even though you were not in the oversold area, you can see what pattern was setting up. Here's your best friend signal, which also could be morning star signal. Big down day, day of indecision, and then look how the morning star signal read it on this side with your best friend, doji gap up. What did this indicate? There's lots of strength after that day of indecision. So remember, this is not stuff that's just made up. This is stuff that the Japanese rice traders have illustrated to us for the past 400 years of what normally happens in investor sentiment. And if you always keep in mind that prices do not move based upon fundamentals, prices move based upon the perception of fundamentals, this is what's going to constantly put you in the right place at the right time. Again, doji in the overbought condition, and they gap it up. What's most investors' first inclination? Oh boy, it's gapped up. I don't want to chase after it. If we know what should be happening based upon a doji gap up, best friend, we want to be buying as fast as possible, because that's usually going to be the results of the next move. This was Sting. Remember, it did a doji gap up. This is the results we were not expecting, but here's wave 1, wave 2, and notice how wave 3 started. A doji best friend gap up off the 50. Wave 3 is usually going to be the same magnitude as wave 1. TLT, same doji gap up through the T line. What were we expecting on this one? Wave 1, wave 2. Where do you think wave 3 should probably be taking you? Up to that level. Now remember, the power of a best friend signal pretty much illustrates there's going to be dramatic strength in the next price move. So anytime I can see signals, doji followed by a gap up, and I can add the other elements to my visual analysis, like it did it right off the 50, basically bottomed out on the 200 also, gapped up through the T-line. Remember our simple rule, if you see a buy signal and a close above the T-line, the probabilities are that you're heading in the right direction. Trev, yeah, the waves are nothing more than prices move in waves. I'm usually looking at wave 1, wave 2, wave 3. Now, Elliott wave is wave 4, wave 5 with an ACB pullback. I'm not concerned about that. The only thing I'm interested in, or what Elliott wave kind of illustrated to everybody in the world was that prices move in waves. We have the advantage of seeing when this wave ends and when this wave starts. So there's nothing real sophisticated about counting the waves. Wave 1, wave 2, look at our best friend, inverted hammer, wave 3, breaking through the 50, breaking through this downtrend, trying to anticipate this move right here to be the same as this move right here. Same thing on the sell side. Kind of a wedge formation. Then they do a doji, very best friend. What's our next expectation? Wave 1, wave 2, wave 3, the same as wave 1. Now, why would we expect it to be selling off hard? Because there's an indecisive day, and they are really getting out with great force. That force is usually going to continue for a while. There's your best friend gap up. When was this trend over? Look what happened up here. When you see a gap up in the overbought condition, get ready to take profits. Where did it pull back to? This is the advantage we have with the visuals of candlesticks. We can see exactly what everybody's doing at technical levels that everybody's watching. A bullish left-right combo. If we were short, we'd be covering on this day. If we're going long, we're buying on this day. Okay, we're going to go to live charts, but let's see. Is this the package we're supposed to be? The reason we're trying to push this package is we have it greatly discounted, but it's mostly so that when we're in the chat rooms or we're talking in the chat rooms like this, that if you see something, say, oh, he discussed another pattern, or I want to learn more about the left-right combo. All you have to do is go back to your downloads and pull it up. So it gives you a much quicker review of what are the best signals and patterns. Yes, all these sessions are recorded. Becky, you have the link for this. Anyways, the reason we're pushing this and we're discounting it as much as we are is because the feedback on this has been so good, because you'll probably see that there's not a lot of fluff in my recordings. And the reason for that is, my nature is, if something works, tell me what it looks like, tell me why it works, and don't waste my time with other stuff. There's the link. Thank you, Becky. Because everything we do is based upon a visual analysis. All right, so we've been, I'm skipping, notice how we had kind of a gap ups here. That's why we've been in the auto parts stocks here for the last, mainly because we've got a you can see this will be another session of, this is why we have the advantage of seeing exactly what's happening at these levels. Start seeing a lot of indecision. There's your bullish doji sandwich. Where do you think our next likely target was going to be? Well, the first target is right here. Second target is up here. Okay, so here's what we want to kind of take a look at. This is kind of incorporating the analysis based upon, or the candlestick analysis based upon the information we have that everybody else can see. you can see what we're in right now. Kind of in a wedge formation on the Dow. So if we can visually analyze that, then we can also visually analyze what's happening based upon the candlestick signals when we get to the top of that level, and or know what the nature of trading is. Look what happened today. I mean, look at the Dow. It's not going anywhere. What's that tell us? It tells us there's no strong force to the upside right now, no strong force to the downside. So what's likely to move prices on any given day? Pretty much going to be reactionary to whatever news items are out or whatever rumors are around. If we see a bullish left-right combo, you won't see a bullish left-right combo. I wouldn't consider today's trading a indecisive day. That's too big of a candle. Now, if this had closed as a doji, if it had opened right here and closed right here, yeah, if it did a bullish and best friend signal or a left-right combo, yes, you can start buying. Now, there's a different scenario going on right now in the NASDAQ. Make this a little bit smaller. You can kind of see what's happening. Pretty much see what's happening on this one. Also kind of a wedge formation, except there's a difference. Look where we closed today. So if we know the nature of the trend or the market move based upon what it's been doing, which has been very indecisive, look where we closed today on the NASDAQ, right smack dab on this upper resistance level. What's that tell us? If they open this positive tomorrow, and they're going positive based upon the doji rule, what's that telling us about this sideways consolidation stage that we've seen in the market? Might now be heading back up to maybe the top of this level. So what's that tell us? Tells us we're probably going to be in for a few days of bullish trading in stocks related to the NASDAQ. Whoops. None. That's somewhat the same scenario on the S&P 500. That it's still trying to head up toward this direction. And why do we say it's still trying to head up? Just look what it's doing here on the T-line. If we just use the simple rule that you're in an uptrend, as long as you don't close below the T-line, this still has kind of implications that we're heading possibly up to this level. And if we break out through that level, and make this smaller again, what's that telling us? Maybe this sideways move is over. We're now ready to head up into more high area. Now, is it going to do that? Because we know what should be the results of breakouts or signals and patterns, we have a much more clear of what's going on based upon what should happen after coming out of a range or coming out of a pattern or going through a resistance level. That means we can react a lot more quickly. Now, is the market going to open up positive, well, there's probably going to be some residue results from Amazon, which was also in a sideways mode, but now is trading down here somewhere. That's probably going to put a little damper on the overall market conditions, which could tell us that if we're right here nudging the upper level of the NASDAQ and they start selling it off tomorrow, what's that telling us? Well, we're still back in the wedge that they couldn't break through this level. Anyways, that's just given us a lot more clarity of what should happen based upon, remember, we've got a doji type day, and we've got the doji rule that says prices will usually move in the direction how they open after a doji. If they're starting to open this trade lower tomorrow on the NASDAQ, it's a good indication that they didn't break through this upper resistance level. So, as far as a left-right combo, not necessarily. A left-right combo you want to see at an extreme. Right now we're just in a sideways mode, so that's not really telling us all that much. Oh, let's see, BIIB. Well, we're going into a whole different category here. This is what we call the message. What is the message? Even though they gapped this up and then started selling it off, doing a dark candle, that doesn't look real great. But what was the message? The message was they gapped this up tremendously. I tell you there's bullish force in here, but immediately there's profit taking. What did today's candle tell you? That the profit taking may be over. You can think about starting to buy this one with the expectation of an uptrend starting. Okay, so Amazon was at 7 or 16. 57, that means it's down approximately 123 points. So it's right down in this area. 1661, all right. Right down in about here. Now that's probably going to start, well, just on the indexes, it's going to pull things down a little bit. But after hours, checking all the other stocks, they were all selling off a little bit, probably in reaction to this. Now, let's go on. Are you somewhat concerned about taking position before a weekend? RB, usually not, but probably not doing as much trading on the going on in a Friday as just sitting with existing positions. So, again, we've got the advantage of being able to see what's going on in individual stock prices. Notice our reversals down here, kind of a little, then the gap up. And what's the important factor? They gapped up through the T-line, making this or this your next likely target. So the reason we're pointing this out is, even though that you might be in a market that's not showing any great strength one way or the other, we can see the type of pattern that's setting up in AXSM. Here's our kind of our J-hook pattern. And where did it close today? Right here, nudging on the 50-day moving average, and did a doji. So even though this wasn't a, if you were long, you stayed long, you wouldn't be buying this one today. However, it's now giving you a reason to buy, because if it opens positive tomorrow, the doji rule, it's going to move in the direction how it opens after a doji. If it opens positive, it's got a good possibility of creating a doji sandwich, tomorrow's candle be in the same magnitude as this candle right here. And then what's it telling you? It's telling you the 50-day moving average is not acting as resistance. And you've got a J-hook pattern. So you got kind of a wave 1, wave 3, bringing you up into this range. So this is what I call 2 plus 2. When you can see the setup and you know exactly what should happen on an individual signal, then you can see with more clarity what's happening with the you can see what's happening with the pattern. I'm reading, why did the semis make a big move after hours, like NVIDIA? I don't know. Oops. I'll take a quick look. Well, it looks like NVIDIA is trading up a little bit. But it looks like Apple, Apple not doing too much of anything. Seeing which other ones might have. See what Roku is doing. Nothing. And I was looking at Netflix. Okay, NVIDIA. Yeah, it's up about 1.5. So I don't have the answer to that. Again, I don't have the answer to anything. Facebook down a little bit. Netflix down a little bit. So so what will be important is to see in the morning where the cues are. If they're trading down here, that tells you they've failed to break out. If they're trading up here, it tells you they're not influenced by Amazon. Oh, okay. All right, so Intel, which usually is not in the limelight anymore. AXSM would probably not have come up on my scan tonight, but these are things that you already put on your watch list because it probably came up on your scan here, and then as it was on your watch list, now you're looking, it's still there. So I've got a watch list that I add good setups every day. So starting this Monday, I might have 15, 20 in there. By the end of the week, I might have 80. But if I scan by which ones had the biggest percent price move, I'm still only looking at the top 10, 15, or 20, which takes of a minute and a half to look at real quick to see which ones are moving correctly. So, anyways, these are going to be showing up on your existing watch list. There's your belt hold signal that we did the other night. I think we did the other night. Oh, we did it last night. Yeah. Now, it didn't confirm yesterday, but you can see the pattern, kind of a fry pan bottom, and it traded up today. Still becomes a very viable trade because what does the belt hold signal tell us? They've taken out a lot of the sellers. Apps, fry pan bottom. Notice when it broke up through the 50. They couldn't close it back below the 50. Look where it is right now. So there's your fry pan bottom. There's your stochastics, almost in the overbought area. But where do the fry pan bottoms usually break out? When you're already up in the overbought area. Tom, how shortly is shortly on AXSM? If it's 3 or 4 days away, yeah, it doesn't bother me. If it's going to be tomorrow afternoon, yeah, 2 weeks, yeah, that's not. In 2 weeks, this stock could be up another, up in this range. So I'm trading up on that basis. If it gets up here and the next day is earnings, I'm going to see what it does that day to say whether it's time to take profits or whether they're still buying it going into earnings. Okay, so the reason you want to kind of be familiar with all your signals and patterns, look what's happening here on CRWD, CrowdStrike, kind of a bullish flutter kicker signal. Where's your next likely target? Here or here? Gold stocks are picking up strength. Notice what's happening in Harmony. There's your little slow curve breakout of a resistance level. That one, if gold opens up stronger tomorrow, you can see what's going on with gold right now. Kind of a spacing. There's your Morningstar signal. There's at least your first target breaking out through this level. So that's kind of giving you an indication that gold stocks might be worth looking at. These are what we're looking for, are the breakouts. So there's your best friend gap up through kind of a perceived, I could even go back further, but you could show kind of a line through there or even a line through here and see how it's breaking out. Now again, look where your stochastics are on the breakout. So this is what we want to be identifying visually, is where are things about ready to occur. You can see what happened on Rollins. Fry pan bottom, gap up through the 200. What do we expect from this one right now? Probably a 45 degree. Also in gold. Yep, there's another one that you could be buying on positive trading tomorrow. Here's a small price one. Look what it's doing. There's your fry pan bottom, and there's your bobble breakout. Wouldn't be afraid to be buying this one on positive trading tomorrow. There's a gap right here. That's probably at least your first target. RM, usually what I do is I've got what I call my watch list 6, 5, 4, 3, 2, 1. So all the ones that I go out and I scan for tonight and they look good, I'll just flag them and put them in watch list 6. So if I've added already 60 in there, and now I've added some more, let's say by the end of tonight I've got 75 in there. Now I'm going to scan to see which ones had the biggest percent price moves today. And I usually can find the best trades for tomorrow in the first 15 or 20. Well, now I get to Friday afternoon and I've got 85 stocks in that list, or 75 stocks in that list. I do the same scan. I update it, see which ones have the best looking charts. And let's say out of all of them, that there's still 20 that look good, but the other 60 didn't confirm. I clear off those 60. Now I've got 20 stocks on Monday morning that to start adding to on Sunday night to see which ones look the best for the next week. So about once a week, I'll just come in and clear out. Now, I'm not looking at the bottom all through 80 of them because I know that if I've just scanned for the best ones, that the best ones are usually in probably the top 10, 15, or 20, and I've usually picked out the best 2 or 3 out of that group. I don't need to go all the way down to number 80 because I know that one's not acting very well. So you do the scans visually. In my case, where I can recognize, I recognize the good signals and patterns. Yeah, I can do them visually. Now, if I wanted to find that's not a, you could call it a cradle pattern if you wanted to. I mean, technically it is a cradle pattern. It's more just dojis and then bullish confirmation. Now I forgot what I was saying. So if I wanted to find dojis in the oversold condition, I can do a scan for those. And then tomorrow, after I've found those, I can scan, update my charts, and say which ones have the best price move. Well, if I can see this one's already moving up, yeah, I know that I've got a potential buy on that one. Or if I'm looking for hammer signals or bullish engulfing signals. Yep, we did harmony. So here's what we want to really kind of stress tonight is not, this has got a very strong chart. Look at your doji gap up, best friend signal. It opened positive today, traded positive, exactly what we expected it to do. But the fact that it came back down through the open and closed lower below the 50, what that tell us about the strength of our move? It disappeared. If I'd bought here, I'm probably closing out with it coming back down through yesterday's close, because that's not going in the right direction. So this is part of that sage advice everybody gives you to cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Candlestick analysis has very simple, common sense levels that you should not be in a position. So if I was buying this one today, it was trading up here most of the day, I'd have a safety stop right at where it opened, because logic says if it comes back down through there, it's not breaking out. Joe, on our website is the formulas for candlestick signals. Now they're done up for TC2000, but all you have to do is take those same formulas and switch the code of whatever they use for a bullish day or bearish day or a positive open for whatever trading platform you're using. Yep. So there's Jim's got some. Not a double flutter kicker. That was basically your doji gap up. I think I've got some more. Also, you want to be aware of your belt hold signals. When they gap up and come all the way back down, that tells you it's not good in River City. That's a very strong sell signal. Not only a bearish engulfing signal, but a belt hold bearish engulfing signal telling you there's lots of selling force. There's one that has a very viable short position to go after. On the other hand, what you want to see is selling. We were going to short this one yesterday, but as you see, as soon as it opened, started trading positive. What'd that tell us? There was buyers still in there. So where would have been a good logical place to go short after it was trading positive? Right here. If it came back down through that level, the bounce was over, they were still pressuring it down. The fact that they never did come back down there saved us from getting into a short position that wasn't working. So if you see a signal, best friend signal, it needed to open positive and trade positive. Even if you bought this on positive trading today, and it closed back down here, what did that tell us about this signal? It wasn't working. You close it out. Now, does that mean you discard the chart? No. If it comes back up through this level, it's telling me my signal's still working. It just didn't work the first day. You can always buy back in. Why would you be buying back in? Because you've got a very strong reversal signal that the next day did some profit taking, but now it's confirming. There's your best friend signal. Broke out through this level. And it broke out through this level. And closed right at that level. So what's that tell us? Tell us if we're long or if we want to go long, it needs to open positive and trade positive. It shouldn't come back down to this level because that puts you back into the area that was supposed to be breaking out. It didn't break out. So this, everything that you can look at or use in candlestick analysis is just very simple logic. Where would be the breakout level on this one? You can pretty much see right there. You had a left-right combo, bullish confirmation. If it opens positive, where do you think your next price move will be? Well, this is wave one. We're going to figure at least back up to the 200-day moving average. There's our kicker signal. Started our uptrend. So this is what I like to scan for, is the strongest signals. The best friend, the left-right combo. I don't know why that one's not coming up correctly. There's our morning star signal. Bullish confirmation. Where's our next logical target? At least testing this level right here. And VIPs, where is this breaking out? Right there. You can see the fry pan bottom. You can see where the resistance level would be, and it broke through that. What'd that tell me? That we're probably in wave 3, same magnitude as this. I don't know. Yes, that broke out through this level. Now what do we expect? Now we anticipate a 45 degree off of here. Again, that's your best friend signal. So if I was buying tomorrow, where would I not want to see it trade? Back below where it opened. As long as it stays up above that level, I know I'm in an uptrend. Winnebago. And to kind of see where this broke out. This puts you in situations where when you see a breakout of a fry pan bottom, expect a big price move. So, when I was first learning candlesticks, I wanted to learn every single pattern. There's our kind of our breakout. So where would I have closed out this position? When it closed back below the open of the candle that told us they'd broken out, tells me there's not a lot of strength there. Close it out. Now we don't know whether it's going this way, or this way. So when we lose that prospect of knowing with a high probability which direction we're moving, close it out and move your money to some place where the probabilities are much more in your favor. All these. There's your fry pan bottom. There's your close just above the 50. And notice what it used as support today. There's your T-line. When I say notice what it used as support, remember, nobody has the T-line on their chart. So when it hits this level and bounces back up, it's basically hitting that natural support, human nature support level, kind of a Fibonacci characteristic. That gives you that much more confidence that the bulls are still in control, or are in control. So this is what we're looking for. There's our Morningstar signal. It didn't confirm. So where would we be buying this one? It came back up through today's open. Tells me this is working. That's where I want to be a buyer. BFF. You could see the indecision, the bullish engulfing signal. Where's your next likely target? Up here to the 50. So because of the visuals of the signals and the T-line and the stochastics, those all put the probabilities of being in the right place at the right time with a much greater degree of probabilities. So you can see where when this broke out, all you had to do was stay long as it stayed above the T-line. You can pick out the sectors that are working well. We know that the auto part stocks are working well. We can see now that the weed stocks, this is TFI, is starting to head back up. I haven't checked EGC, but this looks like now the probabilities are that it's heading higher. Prone. Same scenario. Looks like it's based, and now they're probably at least heading back up, at least to the 50, and see if you do a bobble breakout. So if I am short, we're going to do a stop loss session fairly soon. If I'm short, notice our sell signals, bearish best friend signal through the T-line. Where is a logical place that it shouldn't trade if it's in a downtrend? Well, the first spot would be right here, the previous day's open, because if it came back up through there, where was the first logical target? Back up here to the T-line. So yes, so stop losses are very simple. Somebody was asking, do you use a percent move or a number of days? And I hear so many people say that the person they're following or investment advisor said, if you buy something and it backs off, you're down 3%, 5%, 7%, you should get out of the trade. The market doesn't give a hoot where you bought. You bought, if you're using candlestick analysis, based upon a reversal of investor sentiment, so you're expecting it to move in a certain direction. Now there's very simple parameters that tell you if you bought based upon a candlestick buy signal. One simple rule is if the next day it comes down and closes more than halfway down the candle that told you the bulls are in control, that means the bears are still in control, close out the position. The thing that turned my investing, not around, but improved it quite a bit, was when I finally realized that probably about 30% of my trades weren't going to work. When that became a reality in my own mind, that got rid of that emotional stigma that, oh man, that trade didn't work, boy, am I stupid, or should I hang on to it? No, I finally realized that if 1/3 of the trades that don't work, close it out immediately and go find a trade that has a 70% probability of working. No signal on SMAR, but just logic says if you're getting down toward the oversold area and there's enough strength to bring it back up through the previous day's open, what's that telling you? It's telling you there's too much bullish pressure there. Get out of that trade situation. Oops, okay, I kept this way over time. If you need to have backup or at least a library to go look at to see or get refreshed or get better confirmation on your on the signals and patterns, get the package. I mean, it's not all that expensive. And I can pretty much guarantee you that for the money, you're going to make tons more returns based upon knowing what has reversed the signal or reversed the trend, and which signals or patterns are not only going to produce a good bullish trend for you, but a very strong bullish trend or bearish trend, depending on which way you're going. What does reversal tabs up mean? I have no idea. Is this no, that's not a Morningstar signal. Remember, a Morningstar signal is more like this, where you have indecisive day. That's not an indecisive day. Okay. Let's go back and look one more time at the Dow. Remember, we're still in this wedge indecisive trading mode. That still tells us this market is very receptive to reactionary trading and any news. It doesn't have any bullish force or bearish force to it. Okay, everybody. Have a good evening. We will see you in the chat rooms tomorrow. We'll see you then.